Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Ellen Iskenderian, CEO of Women's World Banking, Dr. Jerry Skees, former executive director and founder of global Parametrics, Dr. Molly Hellmuth, independent contractor, and remotely, we have Hilda Moraa, author and founder and CEO of Pezesha. We're here to discuss how public-private partnerships, policymakers in the fintech sector can accelerate financial inclusion, particularly for women in Africa. It is great to have all of you with us. Great to see you again, Ellen. Let's start off with you. Give us a reminder about the work you're doing at Women's World Banking.
Thanks so much, Jill. So Women's World Banking is a social enterprise, I suppose, a good description as any, that provides advice to financial service providers, policymakers on just what a good business case and what a good economic case there is for financially including women. But we're also an investor in financially inclusive financial institutions across the emerging markets.
Right, and Dr. Skees, tell us about the work that you've done with inclusion.
Well, with global Parametrics, the idea was we would have a natural disaster fund to manage shocks in weather, earthquakes, that type of thing. And we worked with Vision Fund International, which is a microfinance network, and actually put a portfolio of risk protection for them, which has been a discussion I've been having with Mary Ellen's group as well, because the idea there is you protect the capital base of the financial institution, which extends into financial inclusion. Right. Because this is one of the problems. You have a shock and everybody runs away, just like they did here with Sandy, right? All the small enterprises were abandoned by the local banking system.
Yeah, it's almost like preventative medicine for enterprise. And Dr. Hellmuth, it's great to have you with us as well. Tell us about the work that you've been doing.
So I've been working on addressing and assessing weather and climate risk in terms of their implications for investments and planning for about 30 years. And in that time frame, I've actually seen kind of the move of the community from research towards policy, and then this huge influx of private sector actors and financial intermediaries within the last 10, 15 years. There have been something like 8,000 climate tech startups that have been funded. So that has been a little bit the trajectory of my career as well. I'm just coming out of managing a large USAID funded climate change program, which was global in nature. And we had a private sector engagement arm to that was very specifically focused on supporting climate technology, to help countries to achieve their national adaptation and mitigation plans.
All right, and let's bring in Hilda here, I believe coming all the way remotely with us from Nairobi. Hilda, if you could tell us about the work that Pezesha is doing.
No, absolutely. Thank you for having me, Jim. I think for me, glad to be here. Pezesha is definitely trying to make the SMEs, the 10 of thousands SMEs, millions of SMEs across Africa who are not credit-worthy to be credit-worthy. And the way we do that, of course, is through the work we've done for the last 9 years to build an SME platform that helps them to be included in the formal financial system. And I'll talk more about that, but we're very excited about including women who have been underserved. And of course, we're in the journey of solving for inequalities across Africa as far as working capital is concerned.
Right, and Hilda, let's talk about that for a moment here. What are the broader challenges that are faced by women-led SMEs in terms of accessing financial services on the continent?
Yeah, so absolutely. I mean, there's quite a lot of challenges, of course, from cultural challenges to digital access and allowing these women to be credit-worthy. And the biggest challenge, of course, being information asymmetry, where we try to get the right data to include these women to be part of the credit system. Majority of these women have never actually transacted before. They haven't been able to access credit before because of many reasons, including culture, including access to digital history that gives them presence to be credit-worthy to people like traditional banks. So what we've done in Pezesha is we've basically leveraged their mobile money data, which is growing faster than anything else that we've seen across Africa and across the world in terms of the access to mobile money. And so we leverage that data and give them a credit history for the first time ever, a credit score for the first time ever, and allow them to be included in the formal financial system. So for us, that's the work we've been building. And it takes a lot of time, it takes a lot of effort and patience to get these women to be included. and it takes a lot of partnerships and collaborative effort to make this happen.
All right, and Mary Ellen, what's the business case for women's financial inclusion in Africa?
Well, Africa is such a fascinating case because it really was the home of digital financial services. With the launch of M-Pesa, you just saw, an explosion of provision of financial services at a price point that was low enough to really reach that last mile. In fact, Africa is home to all 12 of the economies where more adults only have a mobile money account and not a formal bank account. That said, you still have, 400 million people who are completely unserved by either digital or traditional legacy banks. 60% of them are women. So just when you think of, we were talking earlier about the addressable market, these people who need basic financial services who are just completely cut off from that. And with the digital, even small amounts of money can be transacted at a profitable business proposition for a financial provider. But then when you look at some of the work that Hilda's doing, to be able to actually lend to the millions of entrepreneurs, small and medium-sized enterprises, particularly those owned by women in Africa, contribute more than 30% of GDP overall, but they're dramatically underfinanced and receive far less credit than they really could use to grow their businesses.
Right, which is interesting because these fintech platforms are providing alternative forms of capital, which makes it fascinating and provides that accessibility. Jerry, talk to us about the importance of managing climate risk from a micro perspective as well as the macro.
Well, as we know, if you're living on the margin and you have a shock from a weather event, earthquake, whatever it might be, even conflict, you're going to be pushed into poverty trap. Once a family's in a household's in a poverty trap, it's really hard to recover. So what I'm hoping we can do is bring the humanitarian community and the development community together to recognize these events are detrimental to the whole society, because once you put a family into a poverty trap, you've got humanitarian needs for a long time, right, because they don't have their ability to earn the income. And we see this all around the world now. What we did with Vision Fund was we decided to move up a level and protect the financial institution itself by underwriting extreme weather events so that capital would flow in, and they could do a program that they were implementing already called recovery lending. Imagine, at the moment the disaster happens, it's when most financial institutions say, oh, sorry, we can't loan because, they're looking at their liquidity position, everything's tightening, and the first thing they have to do is get back into a better balance sheet. Wow, that's not good. That's not the way it was supposed to work. So if you can protect the financial institution's capital base with these type of instruments, you can allow them to have business as usual, which means also that you're giving more access and you're extending the financial footprint of that financial institution.
Yeah, well, also the emerging technologies that we're seeing in AI as an example helps to provide those models. We saw what's happening, California and Florida in the States, they're pulling insurance for that reason, because they weren't able to model that in prior to.
Yeah, the U.S. is a little more.
It's a little bit more different, but and to your point, being able to mitigate this risk up front, where perhaps access to aid isn't available.
Right.
And you also made another great point. It could be generational, which means that cycle of poverty, you can't get out of it if you don't have access to that financing. Molly, let's talk about some of the work that you've done in the public and private sector to execute addressing climate risk and some other initiatives that have been presented.
Yeah, I think there's quite a few examples of that over the years. I would focus in on, for this platform, global impact investment. So I have worked with the global network of impact investment, and I've also worked with specific impact investors, and in particular focusing in on the taxonomies that they use to make those investments. I think it's just really critical that before the investments are being realized and being made, the investors are looking at the dimensions that have to do with resilience and how they can increase the resilience of women in particular, both as beneficiaries of the investment, but also as entrepreneurs. So I worked with Acumen for their Hardest to Reach program, and that's a public-private partnership that I supported with helping Acumen in particular to identify the resilience benefits of solar panel solar power for the unelectrified 500,000 people in sub-Saharan Africa that they're trying to reach. And we really focused in a lot on women and those benefits in particular. So if women have access to solar power, they have more time to be more productive instead of going to look for firewood or doing other household chores. The other side of it is being very specific when you are really trying to incentivize women engagement within that labor market, so within the solar power industry. So what you want to do is you want to be looking at incentives for the investor and the investee to think about, does this company have women in it? Can we influence that? What does their hiring practice look like? Are there women-owned companies that we could be targeting? So if you don't put those things in explicitly from the outset, women are often overlooked.
Yeah. Hilda, let's take a step back for a moment here. How do you introduce the practical perspective or the application of emerging technologies such as AI? How is that driving impact on the ground? Because you can't run until you learn how to walk. And these are complicated technologies, so explain to us how you're practically applying that.
No, absolutely. I think AI is still something everyone is trying to figure out. It's definitely a future endeavor. But for us as Pezesha, we've basically looked at it as a smarter way to do real-time risk assessment for these businesses that we are actually working with to give them more personalized financial products. And AI has accelerated that journey 10 years down the line. We're able now to look at our credit scoring models in the way we look at their data and the lack of it to then say, how do we assess them? How do we make sure that the accuracy of that is actually given? But of course, there's a lot of learnings. But what we've seen is actually the ability to allow these women to be included, because now we're looking at smarter ways of looking at their risk, assessing them from a personalized level, but more importantly, giving them an opportunity and a chance to be part of the ecosystem. So there's a lot of work, and it's informative, but more importantly, the women are actually growing with us up the ladder.
Yeah. Mary Ellen, let's talk about regulatory framework here, whether it's Africa or other emerging markets, because in many cases, we were talking about this off camera, these innovations have leapfrogged where we've had traditional institutions such as central banks in the US and Western Europe. How can fintechs, policymakers, and others within the ecosystem help to advance framework?
So the good news is they all do want to work together. We have a training program for regulators, and they are so keen to really understand the new technologies so that they can move their financial inclusion strategies forward. I'd say one of our most eager pupils has been the Central Bank of Rwanda, for example. We've run the program for 5 years. They've sent folks, and for example, they implemented a policy to bring mobile money data into the formal state-run credit bureau, because only something like 5% of the population was even recognized in the formal credit bureau, but you've got 90% of the population with cell phone data, so marrying those two things. But then they were saying, well, the banks aren't doing anything with this. We've created this great source of information. So they brought us in to bring the banks and the regulator together to talk about how do you design products using this data? How do you design products that might be of particular need to women? That being our focus. The other thing, and just kind of riffing off of what Jerry was saying, that's been very important to regulators is that they're talking to each other. We've got insurance regulators talking to central bankers, talking to ITC regulators. All of them touch data in some way. They all know that they've got to collaborate. They've got to think about, sure, the consumer protection elements of data, but also how can they be putting that data to good use? And what's emerging is some really positive effects of bundling of products. We're an investor in an ag insurance company in Africa that's great. Smallholder farmers have the insurance, but what it's really doing is saying to the banks, there's a big part of your risk that's being mitigated, and it's opened up quite a bit of lending for those farmers because they've got the insurance in place.
Yeah, well, I want to get your perspective on climate risk, Jerry, because you're dealing with 54 different jurisdictions and you have the localities as well. Is regulation more progressive there compared to, let's call it?
I think Mary Ellen's on the right page there. If you get the banking and the insurance regulator, the financial regulators in the same room to have that discussion, you can create a lot of interesting things. We had a Gates Foundation award to work in this space, and I chose Peru. They're like, why are you choosing Peru? You should be in Africa. And I said, well, Peru's had a lot more experience with microfinance at that point in time. We had a meeting with the banking and insurance regulator. I had PhD students in, and they were digging deep, and what they saw in the data before the El Nino of 97, 98, they saw restructuring of loans. So there was a business interruption. We sat down with the regulator, the banking and the insurance regulator, like a therapy session in the room, right? At a big round table, and basically made the case for forecast insurance. It was the first forecast insurance in the world that I know of, where we paid before the flooding started in the northern part of the route, because they recognized that it was business interruption insurance that we were talking about. It wasn't property and damage of that same nature. And of course, business interruption is one of the toughest insurance to do, but the financial sector is having business interruption all the time because of these extreme shocks. So you can have that discussion. Now there's the local, but you know, in the case of the Vision Fund transaction, we did it with a single ISDA contract, a derivative contract in California, where World Vision sets 27 countries are wrapped into a single contract. So you're showing the way of how this works, and you're having that discussion from a global level into the country, and that's how things
Which
progress.
is interesting, because you would think business continuity would be top of line. Meanwhile, you were saying,
Yeah.
you know, that kind of insurance to procure is quite difficult. Molly, your perspective, having, you know, been involved intimately with public-private partnerships, you have to understand who your audience is too.
Right.
Right. You know,
Yeah.
making sure that you're getting the buy-in based on what group you're speaking with and bringing everyone together, and not so siloed.
Yeah, I think that's true, and my take is a little bit different. Where I've been working, at least for the last couple of years on my project for USAID, has been with supporting countries on their national adaptation and mitigation plans. So all countries who are Paris signatories have to put those out. But what's interesting about that from an investment perspective is those are plans that countries need to implement across sectors, and with those are investment roadmaps that are being developed in parallel. So what we've been working on and what we were working on with the NDC partnership is investment platforms that bring together public and private sector partners. So not just private sector financial intermediaries like blended finance mechanisms, which is a lot of where you can kind of de-risk those investments and create entry points for women and other entrepreneurs, but also working with the entrepreneurs themselves to help them move from a concept to a project that's bankable, right? So I think that's a big issue, is that we have these great technologies and ideas, but we often see these roadblocks, including, you know, regulations that can get in the way of good ideas, like precision agriculture.
Right.
You know, some of the regulations there you see can
And Molly,
really,
did you get carbon markets in that story too? Right? And what's so interesting there, it will be technology that changes carbon markets, because with satellite imagery and the right types of models, you can measure carbon sequestration.
Yeah.
Can I just make one
yes,
point
and
about
Mary
the
Ellen,
national...
I want to give you the last point, actually. We have a minute to go.
No, on just the national implementation plans, I found this so fascinating. More African countries built like really basic things, like more women in managerial positions in banks as one of their climate implementation plans targets. So they recognized that, you know, basic infrastructural inequalities that didn't on their face have a climate element to them, they built into their climate plans.
Okay, so Mary Ellen, last 30 seconds here. Are there any metrics or data available that can, you know, show the success of the initiatives with climate and fintech in Africa?
Well, I think you've got to look at the huge progress that we've made going, you know, in Kenya, for example. You went from, you know, very low double-digit financial inclusion to over 86% financial inclusion. So you've got people in the sector
In 20
now.
years.
In less than 20 years.
Less.
Yeah, and now we've got to keep them there, and we've got to make sure that they have the full array of financial products, and that's commercial. That's not a government mandate.
Right.
Those are commercial products.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.